So what happened exactly yesterday? Markets seem to be shocked or spooked by Fed Chair Powell. So let's discuss what he said and what to expect for the remainder of this week and going forward. The market bell. There you go. It's looking bad today. It was bad yesterday after he spoke. And today you could see, markets are in red. Deep red. No good. And Bitcoin also dropped slightly from yesterday's high. So what's up? Why is there so much fear once again? Well, I didn't watch this live yesterday because I was on the track with my car. But, I got the gist of it. Basically, we did not have another rate hike. That's good. There was a 99% chance we were not going to get one, and we didn't. So that's fine, right? But what did he say? Well, there's a couple things. Number one is he said he believes there's not going to be any more soft landing. I believe that's the first time he said that. Okay, and that's kind of scary because people are like, well, what do you mean there's not going to be a soft landing, right? That means we're going to have a hard landing. But what does that mean exactly? Well, he didn't really clarify that statement, but he did say that, the rates will stay high for a long time. But that's really not a surprise. People already predicted that we're not going to get a rate cut until mid of 2024. So when he means a long time, what does that mean? 6 months, 8 months? That's about right. That's about right. So why is the market spooked by that? It shouldn't be, right? But there is one other thing, and that is he believes that there may be another rate hike necessary, and his buddies at the Fed also believes that. So right now, it's kind of undecided for this next FOMC meeting whether or not there will be no more or another rate hike. 12 Fed officials thinks that there should be one more rate hike. And 7 says no. Okay, so right now, it does seem like we may get another one. Okay, and that may be the reason why Fed Chair Powell thinks we no longer will get a soft landing, because we're at a point where interest rates are so high, we're starting to see things that are negative, right? You're starting to hear about real estate getting real soft, delinquencies and foreclosures on the rise. Businesses obviously have been struggling a lot more because they can't borrow as much money, which means hiring have slowed down dramatically. Unemployment is starting to tick up a little bit. People are putting 2 and 2 together and thinking, well, this is not going to be good. This is not going to be good. That means the remainder of this year, early next year, could be quite bad, right? And if you're looking at Treasury yields, the 2-year Treasury yield is now at a 17-year high. When you have an inverted Treasury curve, meaning like the 2-year is way higher than, say, the 10-year, that's usually an indication of fear in the markets. And that's exactly how it is right now. The 2-year Treasury note is at a 5.19%, while the 10-year is at 4.43. Think about it, right? That shouldn't be. The longer-term yield should be higher. But the fact that a 2-year is above the 10-year, that's called an inverted yield curve. That means there's a lot of fear. People are putting money in their 2-year yield thinking that it's not going to be so rosy within the next, X amount of time, short term, right? So that's why things are kind of spooky right now, okay? And also the DXY is skyrocketing. This is from my own analysis Twitter page or X page. Got a really good TA analyst that's been doing this. But, the DXY, you can see above 105. That's no good either, right? So these are all catalysts for bad bad market right now. With the dollar getting stronger and inverted yield curve, with the Fed saying there's no more soft landing. These are all horrible things that we don't want to hear about. Okay. But the good news is, is that I think nothing changes for Bitcoin because next year is still the quadfecta. Okay. And as scary as it seems right now, things could change really quickly next month. When we have the next FOMC meeting, well, actually it's not next month. It's in November. But it's about like a month and a half away, right? Things could still change very, very quickly. Powell has to say these things because he can't make it seem like his job is done. So he's saying a lot of scary things, right? And right now we're just kind of like, okay, we're anticipating the pain, right? But the pain might not ever come. The anticipation of pain is worse than the pain itself in most cases. So it could change very drastically just in a month and a half. Maybe next one, FOMC meeting, there's no more rate hike. Okay, we stay at our 5.5%. The U.S. economy, although weak, still is hanging in there. And then we move forward. That's it, right? And of course, this doesn't change for Bitcoin because we still have the quadfecta coming. But short term, we still have to worry about this. It seems like every time we have FOMC meeting, there's like some kind of shock or spookiness or whatever. It's really still the same if you think about it. Yesterday, we did not have another rate hike. It went like how it should have, basically. Anyways, moving to Bitcoin. Of course, even though today Bitcoin is down a little bit, you still have a lot of major whales, okay, that believe in Bitcoin and its future, like me. Okay, so yesterday, right before FOMC meeting, you could see here, this whale, whoever he is, or she is, or it, you could see that downward red spike. That's a major withdrawal, okay? So that means someone decided to buy a whole bunch of Bitcoin right before the announcement, okay? Because they were guessing, maybe they thought that Powell would have said something good or something. I don't know, right? But whatever the case, they decided to buy a whole bunch and take it away from the exchanges. About $100 million worth, okay? That's a lot. We're talking about big institutions buying right now, okay? It's not a retail investor withdrawing $100 million from the exchange, okay? So it's some big entity that is loading up. And you could clearly see, I'll remove the camera. You clearly see those red spikes. It's almost like it's a pattern, right? Like they're DCAing, and every single red spike that you're seeing is like $100 million worth. So there's someone that is definitely DCAing behind the scenes, accumulating a ton of Bitcoin, right? Who knows? Who knows who it is? But and here, look at this. The number of exchange deposits also down. So if you're wondering, well, the number of Bitcoin leaving exchanges, does that mean that they're just being sold? No, actually it doesn't, because the number of Bitcoin going to the exchanges to be sold is at a 3-year low. So right now, no one is actually depositing Bitcoin to be sold. What the big boys are doing is buying behind the scenes OTC, right? They are accumulating as much as possible because they know all the silliness, all the FUD, all the shock from Fed Chair Powell in these meetings are temporary. They're not going to last. They're not.